Hello guys, welcome to this new vlog about risk management or money management if you prefer. Frequently asked question that I already answered by the way is how much should I risk or trade? So at Golden Option Trading we advise no more than 5% because you know over than that, over trading, over risking with 10, 20, 30% is actually dangerous because you'll be blowing up your account fast with only 10%, let's say from the over risking proportions, that is the lowest. So 10%, it'll take you 10 trades to blow up your account. 20% per trade, it'll only take you 5 trades to blow up your account. And 30% is just too much, too insane and out of proportion. It'll only take you 3 trades to blow up your account. So 5% will allow you to, at least if you have 20 trades in a row lost, to blow up your account. But 20 trades lost in a row is not much likely to happen. And if you have losing streaks that actually happen frequently to beginners, to intermediary traders, not that much to experience, who experience this occasionally, as us professionals. But beginners can experience drawdowns of 10, 15, usually lost trades in a row. But 20 is less likely. So still 5% is really good in this regard. And by the way, 5% is the max that we suggest. It's not like the obligation. You can choose anywhere, anything from 1% to 5%. So if you want to risk 1%, it'll take you 100 trades to lose everything. 2%, 50 trades. 3%, 33 trades. 4%, 25 trades. And as I mentioned, 5% per trade, it'll take you 20 trades lost in a row to lose your whole account. And guys, pay attention to this because according to the Martingale system, so the Martingale system, it's written like this: Martingale system. According to this this probability mathematical probability system, it says that, and it's a fact that into the forex trading, for example, because we're talking about this. Let's say you have an account, and regardless of the amount, it can be 500, 1000, 10k, 100k, and you lose 50% of your account. It won't take you 50% as gain to have in order to recover what you lost. It'll take you double. It'll take you 100%. All right, so don't get mixed up. It's not always like double. It will always require you to win even more of what you lost in percentage, but it's not double. It increases as the amount lost increase. So let's say you lose 25% of your account. It'll only take you, but still it's a lot, it's more. It'll take you 33% return necessary to restore your original equity value. If you lose 50%, it'll take you 100% 100% gain to recover what you lost and be back at your initial trading balance. If you lose 75%, which should never happen, you have to gain 400%, and if you lose 90%, you'll have to gain 1000% to recover your losses and be back at your initial capital. So guys, I'll show you, I'll prove you here mathematically, not that deep, about how it works. So let's say you have a 1K, a $1,000 account, and you take out 50%. So I hope you know your basic high school math in here. So let's say 1K, we take out 0.5, which is 50%. You're left with 500, right? So here I'll be a bit slowly to explain you and pay attention. So let's say you lost half, so 0.5, 50%, and you're at 500 as a left balance, and you want to recover your 500 to be back at 1000. So if I logically put addition back my 50%, so I do 500 times 0. It's not 0.5 because 0.5 would be taking another 50%. In order to addition, as I said, I hope you know your math, it's with the 1. So I'm additioning, I'm adding to this number, not subtracting, I'm additioning. So 1.5, it's same as 0.5, but in this case I'm adding up to this number. So I took out from 1,000, I took out 50%, and now I'm adding back 50%. It won't give me 1,000. It gives me only 750. So meaning from 500 to 750, there's a difference of 250, right? So it gives me half because from 500 to 1,000, it's a difference of 500. And in this case, even if I put back 50% from the amount that I had left, it only gives me to 750. So in order to gain my 1,000, I have to make another 750, meaning I have to add another 50%, and that's why I added an initial 50% to 500, which gives me 750, and I have to add another 50%, which is a 250, so plus 250 to have my 1,000 back, right? You see, guys, you understand now, and it's really important that you understand this, guys, because it'll always require you to win more than what you, if you have a drawdown, it'll always require you to win more in terms of percentage to recover what you lost and be back at your initial amount. So pay attention to not over risk, and as I said, max 5%. And guys, into the forex trading, now that you know that you will risk 5% max, so anywhere from 1 to 5%, you determine that based on your own calculations, analysis, your rules, and stick to that. Never risk 2% one day, 5% one day, then 1%, then 4%. No, stick always to your risk percentage. And how do I put in place this with when I enter into my trade? So as you know, guys, what is the unity? The unity that we use in forex trading is the lot size. So before entering either in a buy or sell opportunity, you have to use a proper lot size. So how do you calculate your proper lot size? Because that's how you over risk. So you go on myfxbook position size calculator. It's the first one, position size calculator, and you'll be brought to this page, this calculator, and you put in USD, which is mainly the account currency we mostly use, I would say. And then let's say 1K again, and you risk 5%. Let's say you risk it 20 pips, which is not likely, but let's say for the exercise, and on GBP GPY, you'll have to use for one position at 5%, right? If you have two positions, then it's 2.5. So you have to divide this by 2. But let's say we have only one position at 5%, 20 pips stop loss, GBP GPY. It'll require you to use 0.27 lot to risk only 5% in case price touches stop loss and takes out $50, which is only 5% of your 1K. All right. So let's calculate the lot before entering into a trade and not vice versa, and move your stop loss back and forth. You should stick to your rules, and if you have a small account of 500 to 2K, don't look at the money, don't let it be your main goal, don't focus on it, don't focus on the money, focus on the vision, focus on the process, make your best shot every time, and that way you'll have a slow but steady progression, and that's how you welcome consistency into your routine, and you eventually become a consistently profitable forex trader.